Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Patreon.com/Real Macro. Come down, like, follow, subscribe. Good stuff. All right, so we're going to talk about a little bit about bonds and interest rates and why they work sometimes and why they don't work other times. Probably not in this video, all of it, but I do want to get you familiar with it. All right, so let's get started. All right, so as I've always said, you should understand these things on your own because there's a lot of misinformation all over social media. There's a lot of political reasons why you should know this, know who you're voting for when they're telling you policies. What do they really mean? It's not, as you'll find out, it's not the way it sounds all the time. So I think it's important. All right, so let's get started. All right, first thing you need to understand is how bonds work. All right, when the bond prices fall, when the bond prices fall, interest rates rise. When the bond prices rises, the interest rates fall. All right, simple enough. So why is the bond market important and why are rates important? Why is it a bad thing if they should ever use this $1 trillion loophole to try to trick the system into pretending that there is no debt? Okay, the reason is it would remove the bond market. Now, why is the bond market and rates so important? Because it's the free market trying to fix the economy. Now, you would think, what? The free market can fix itself? The answer is yes. Okay, and it has to do with greed. Greed fixes the economy. Yes, and I will show you how. Okay, so the economy starts to go into a recession. Okay, what do you think money's going to do? Money's going to chase yield. So money is going to flow into bonds. What's going to happen to bond prices? Bond prices are going to rise. Okay, interest rates are going to fall. Okay, now when interest rates fall, what happens? It makes money borrowing cheaper. Well, during a recession, that's what you want, right? You want to make money cheaper. What happens if the economy starts to overheat? Okay, well, at that point, you want to go out and so having this inflation problem, the bond market is going to raise rates. And the way it's going to raise rates is by selling off bonds. Okay, that's going to make borrowing more expensive, which is going to cool off the economy because people won't take as many loans. Okay? So greed is going to help fix the economy. So why does greed want higher interest rates when the economy is overheating? Because they want a real return on their investment. What does that mean? Well, it means that if you're going to buy a bond for $100 and inflation is 5%, you want to at least make 5% on your investment, because at least you don't lose purchasing power. Okay. Ideally, you want something above 5% if inflation is 5%. Right. So if you get 6%, guess what? The real rate is going to be 1%. Okay. Now, what happens if inflation is 2% and you're going into a recession? Okay. You're going to buy up bonds and you're going to be happy if the interest rate is 2%. But you're going to make money on the bond value appreciation. Okay, you're fast enough. All right, fair enough. That's pretty simple. Okay? Cheaper at 2% to borrow than it is at 5%, 5.5%, 10%. Good. So you can see that greed is helping to fix the economy. All right. Now, what you're going to hear on social media, especially lately, is how the U.S. government is paying all this interest to bondholders, and it's not fair, and blah blah blah. What they're not telling you, okay, is that most of these bondholders bought these bonds at 0% interest. Zero. Okay. Now, what do you have to do when interest rates rise? Exactly. Got to sell off bonds. Got to fall for rates to rise. Are they telling you that bondholders lost $5 trillion in order to get the rates to rise? $5 trillion gone. Right? So you see the problem there, right? What's even worse, adding insult to injury, that they bought these bonds at 0% interest. So even if they hold to maturity, okay, inflation spiked to 9%. So not only did they lose money in bond value, about $5 trillion, they also lost purchasing power because they're not making any interest, and we have an inflation problem. That's the beauty of the market. Okay. So the next time you're on social media and they're telling you how, oh, we're paying so much interest and the bondholders are making all this interest income and they're so lucky and we're getting screwed over, remember, remember bondholders got destroyed. They lost $5 trillion, plus they lost purchasing power for the past 3 years. So they really took it in the yin-yang, but they're not going to tell you that. Okay, it's politics. But now you know. Okay, now, in the next video, what I want to talk about is why do interest rates work sometimes to bring inflation down, and other times it doesn't. Right? That's going to be the next video we're going to talk about. I also do want to talk about a little bit in this video how somebody is trying to trick fuck the system in the sense that they're saying, well, higher interest rates cause inflation. Okay. How are they trick fucking the system? Okay. Typically, when you have an inflation problem, it's not going to just go magically away. So what you can do at that point, okay, is blame the private sector, the markets, because they're raising interest rates, and say, it's the interest rates that are causing the inflation. You see, they're reversing it. Okay. Typically, in an inflationary environment, the economy is growing. Okay. Typically, you're not gonna have a recession where earnings are falling and everything is going to shit. You're not gonna have a growing economy. Okay. A growing economy occurs when you're maximum employment, everything is firing on all cylinders, and the economy starts to overheat. Too much money chasing too few goods, or the same amount of goods. Okay, that's typically when you get inflation. So you're pretty much assured two things: one, that the economy is going to grow, and two, that inflation is going to be high. So you start blaming that the rates are causing the inflation, and you're also going to trick fuck the system by saying, hey, it is this interest that is being paid on the bonds that is supporting the economy to help it grow. Right? You see how they're trick fucking the system? They put the cart ahead of the horse. And they try to seem like they're geniuses. Like, oh yeah, that's what's going on. It's the higher interest rates are supporting the economy, but it's also causing the inflation. But inflation came down with higher interest rates. It went from 9% down to below 3%. So why don't those people take responsibility for the nonsense they were talking about, trying to shit all over the Fed? Because they're full of shit. That's why. And this is why you should come down, like, follow, subscribe on patreon.com, because you need to know this information. You need to really start to understand how money works, how the bond market works, why it's important to understand interest rates, what's really happening in the economy, and so on. So come down, like, follow, subscribe on patreon.com/realmacro. And we're going to talk about rates on the next one, why they work sometimes, why they don't work other times. All right, take care, guys. Thank you very much. I'll see you soon. Bye-bye.